Welcome to CEO Insights. I'm Marilyn de Guzman with InvestingNews.com. I'm with Shaun Heinrichs, President and CEO of 1911 Gold Corporation. Hi, Shaun.
Hi, great to join you. Thank you.
Thanks, good to have you. So the company has outlined its 2025 growth strategy for the True North project. Talk about some of the key components of that strategy and how they increase shareholder value.
Sure, certainly. So without getting into the history of the project, one of the key things about 1911 is the fact that we have all the infrastructure on site. So we've got an operating permitted mill, permitted tailings facility, camp infrastructure, and we have 3 underground mines with an existing 1.1 million ounce resource. So what we've heard from our shareholders over the last several years, where we were largely focused on more regional exploration and working up areas on the belt, was that, look, you really need to focus in and de-risk your existing assets and see if you can build a proper mine strategy around the resource you've already got and see whether or not that can work. And if that can work, you're going to become a completely different company, and then from there you can really start to scale out into the regional footprint again. So that's what we've done. Over the last probably 24 months, we've kind of re-geared ourselves. Some of it was forced on us. We had to make some hard choices over the last couple of years. We were retreating tailings up until about 2 years ago, so the mill was operating quite recently, but that kind of ran its life cycle, and we decided we really needed to focus in on the resource and see what we can do and the steps we can take to get back into production. So that's what we've been doing. It started in 23. We brought Gary O'Connor on as an advisor initially. He's now on the board as an executive chair. We brought on a really skilled geology team, which has a much more development focus in terms of their skill set. And around that, we've started to add ideas and de-risk the asset. So last year was all about rebuilding the resource, tearing it down to the bare minimum, and rebuilding it up, inspecting the core, finding all the original assays, making sure all the data hangs together, and then putting new estimation techniques around it based on kind of updated requirements, and seeing whether or not that 1 million ounce resource hangs together. It did. We were able to build proper mine shapes around our resource shapes, I should correct myself, around that model, and put together something that we can really hang our hat on. But out of that exercise really came the identification of opportunities within the mine lease footprint. So from there, we were actually able to build an exploration strategy, starting on surface, starting drilling in a couple of key areas, building out new targets within the footprint, and that's something we started late last year. So now people are looking at us and they're seeing the news releases over the last couple of months, and they're seeing drill results coming out, something we haven't had for a couple of years. And these drill results are all on areas that are close to existing mill infrastructure, around areas where there's historic mines or close to historic mines, but they're new. They're different areas where the shear veins intersect the same favorable host rock on our property, and that's the key. Finding areas that have not been thoroughly explored or drilled, but actually have very strong similarities to the existing mines that are already there, which have existing resource. So we're going to continue to advance that strategy over the remainder of this year. We've got more new targets in the pipeline. We're actually kind of returning to the west target recently, which we put out drill results early in February, and we're continuing on the southeast target because we really like what we're seeing there. We put out a news release last week, but we're liking the trend that it's following. We think there's potential for it to connect to areas down at depth, so we need to do more. We need to get underground and start to follow that one down as well as the west target we can get into underground. But then we've got a couple other ones in the pipeline that are still close. And they're just, again, going back to those, where do those east-west shear veins hit those favorable host rocks? Those are our targets, so we're going to get into those as well. On top of that, we are focusing on getting underground again, so we're commissioning the A shaft. We've got the hoist ready to go. We're waiting for permission to send a crew down there. We'll inspect one of the levels that gives us great access for drilling. That's coming over the next few months. And then also in the background, we've got a mine engineer coming on board. We're going to start doing internal scoping on the mining side and see what kind of economics we can put in here on the back of all this work, and see what kind of mine plan we can come up with, so we can start talking hard numbers and put realistic time frames around a return to production, and see what kind of profile we can build around that.
It's a busy year ahead. A busy few months. So last year in November, you've released an updated mineral resource for your project, and then subsequently filed the NI 43-101. How do you plan to leverage these? I guess you've covered it a little bit, but expound on that to advance the project development.
I did. Yeah, I got to jump the queue on that. But yeah, no, that was the hidden intention behind the resource rebuilding. Obviously, validating the resource we had because we were getting no value for it in our share structure or in our market cap, but really kind of driving our exploration strategy because that really helped us identify, the way this way the geology works, and where to look elsewhere on the property. So that drove the kind of drill plan that we've got going on right now. So it was a benefit. What it also did was it identified areas where we could go in and we can do infill drilling because we shrunk the drill spacing on the old resource. We lost resources that used to be in the inferred. But what I did was it created open areas that we can go back in, drill off, bring those resources in, and increase the overall size of that resource. So getting underground to do that part is going to be pretty important for us. But that was the main part about doing that exercise, and also giving us credibility for a resource, something that we can defend. We can put our hand on our heart and say this is a real resource, and it's something that our geology team was intimately involved in putting together. So that kind of a two-pronged approach. And it gives us the benefit of something that a mine engineer can come along and start putting some real numbers around.
So I want to get your insights. With the gold prices remaining strong, how does 1911 Gold plan to leverage this market opportunity and attract more investors to be able to advance?
Yeah, I put out a note in January to that effect. It was like our strategy was to try and get back into production regardless, or at least go down that path. And that was when gold was like 1900 and 1800, which is still good prices. That's US. Now we're obviously at 2800, 2900 US, 4200 Canadian, and our plan just makes so much more sense all of a sudden. We built a model that was defendable at those lower prices, but at these higher gold prices, it's basically put a big wind at our back, which is evident in the way our share prices moved. We're getting a lot more attention, and to be honest, our plan really is to just, look, there's clearly an interest and momentum in the gold sector. It's trickling down to the juniors, particularly those that have real projects and that are slightly more advanced, which I think we fit into. And we're going to just push hard while we've got that momentum behind us. We're going to keep going regardless of whether or not the market turns. But this is the opportunity for us to do things with the lowest cost of capital possible in terms of investing into our exploration plan, investing into the development, and progressing this project as far as we can go. And if we can get close to production, things start to get a little bit easier for us because you can attract new types of capital. Again, that all just feeds into a lower cost of what you're trying to do because you're able to tap into larger pools of available financing. And then you can start eventually looking at other types of non-equity financing that are out there once you've got a real defendable mine plan and you have a good handle on what your numbers are going to look like. So that's where we're going. Obviously, we're trying to increase our visibility a lot this year. We've got markets that we have not spent any time getting into and showing the story to. And so Gary O'Connor, who's working with me a lot, and myself are going to be very active this year. There's going to be a lot of work, a lot of geology work, a lot of investor-facing type activity, and we'll just keep pushing ahead on that front.
Yeah, I wonder if with this continuingly strong gold price, is that accelerating able to take advantage of that, right? Accelerating your timelines and stuff like that. Has that influenced that at all?
Look, I'll be cautious and say it really hasn't. It's obviously given us more confidence in what we're doing, but the worst thing we could do is try to race back into production without having done the homework. We have a really good idea of what went wrong with this asset back in 2014, 2013, the mistakes that were made, the mining methods that were chosen in order to boost productivity but didn't really fit the geology and didn't fit the way those mines work. We've got a good handle on that. But to race back into production now, my concern would be make a few mistakes along the way. That doesn't mean to say that we've been pretty explicit about what our time frame is, and we're going to push along that time frame. And if there's opportunities to do things faster without having to do what we think might be the wrong thing, then we will do that. And we do kind of pursue and evaluate those options to us. There's more near surface opportunities around the site, which is part of the reason we're doing a lot of this surface drilling. That may enable us to accelerate the time frame without increasing the risk to us as a company. But we were already kind of going along this path on what we think was a fairly aggressive, but at the same time, prudent time frame, and we're continuing along that same strategy. So over the next, several quarters, we'll continue to put out news, we'll continue to progress the scoping, and then ultimately try to get out additional progress updates in terms of engineering reports and those types of materials as well. But yeah. And
you've covered a lot of coming catalysts, but is there anything else you'd like to add, that investors should watch for the company over the next the near term?
I think in the near term, look, it's going to be a series of updates with respect to where we're drilling, the targets we're drilling, why we're drilling them, what we're seeing in them, and why we're exploring them. Because sometimes with our asset, you can get something that's narrow, high grade, and you're like, what are you doing? And you're like, well, look, this is narrow, high grade, but it's extending at depth to this area here. And this is an ore body much similar to Red Lake, which is like 100 kilometers to the east of us. There's areas that pinch and swell, and as you get down, these can grow significantly, and they continue at depth for quite a long time. And that's why, we chase these targets. If we can put several drill holes and we can trace between those drill holes and get confidence in the continuity between them, it could be potentially a very big target for us as we get back into the underground and start drilling it off below surface as well. So those will be the types of catalysts you're going to see out of us. You're going to see us talking about, we're underground now, we have access to these areas, we're excited about this, here's the targets we're looking at underground that we're going to be drilling, and when we're there, we're going to have to make some decisions about where we start and where we go, but once we're under there, it's going to be an extremely productive and aggressive drill campaign to start to advance and infill those resources. Towards the end of the year, like I said, we would hope to have some kind of details out with respect to an update on the resource. I'm not committing 100% to an updated full report yet, but we're going to look at those things and we're going to advance those things. We're going to look at potentially having some kind of PEA out at some point. Those are the targets we need to focus on just to keep ourselves disciplined and keep ourselves moving this project forward. So those will be the things to keep your eye out, but regardless, we're going to be very busy. We're going to be very active, and we're going to do as much as we can in terms of being transparent as to why we like these targets, where we see them going, what's the potential behind them, and why you should be excited about them. So that's what we're going to be focused on. And if something's not working, we'll walk away from it very quickly, because we've got lots of other areas we can be looking and get drills into, basically.
Well, great conversation. Thanks again, Shaun, for taking the time to speak with me.
No problem. It was great to meet you, and it's great to have the opportunity to talk to your listeners.
Thank you. And thanks everyone for watching. Join us again next time for another edition of CEO Insights.